Hedge funds are betting on the demise of one of Carillion's biggest rivals after cashing in on the collapse of the once mighty construction giant. Interserve has become one of the most shorted companies on the London Stock Exchange as investors speculate that its share price will fall. The stock sank more than 15% early yesterday amid reports of concern in Whitehall about it, after Carillion went bust on Monday owing £3 billion. Airport in the Financial Times said ministers were very worried about Interserve and had set up a team of officials to monitor the company. The government later insisted that Interserve was not heading the same way as Carillion, with a Cabinet Office spokesman stating, "We do not believe any of our strategic suppliers are in a comparable position." Shares eventually closed down just 0.4%, or 0.5p, at 120.5p, but hedge funds are increasingly betting on a further slide, following 2 profit warnings in the last 6 months. Marshall Wace, which was founded by Brexit-backer Sir Paul Marshall and bet against Carillion, is among those counting on trouble. Short-sellers recognized problems at Carillion way ahead of management and the government, starting to heavily short the stock from the end of 2014. Interserve employs 25,000 UK staff and is working on security and contracts for clients such as the government and the BBC. But it has issued 2 profit warnings in 6 months. The firm's debt rose from £274 million in 2016 to £513 million at the end of 2017. Chief Executive Adrian Ringrose, 50, and finance boss Tim Haywood, 54, quit last year as problems mounted. The Reading-based firm warned down profits in September due to disappointing trading and the high cost of getting out of its business converting energy into waste. It was also kicked off a contract to build a £145 million recycling plant in Glasgow.And. It issued another profit warning in October and said it might breach banking agreements. Interserve and similar firms have struggled with spiraling costs, including due to the living wage and weaker government spending. Capita, Mitie, and others all took on work at low prices following the financial crisis and are finding it tough to make money. On the positive side, Interserve is in talks with lenders and has agreed to defer stress tests. Last week it upgraded profit expectations for the year, and new chief executive Debbie White said a turnaround was underway. We are in regular discussions with all these companies regarding their financial position.